Hello, hello, you crazy, lazy, drunk peoples. It is 1st of January 2023, 1 p.m. my time, and I know all of you make your New Year decisions and goals to become millionaire this year. We will see. I got the question before some time, and today I find appropriate to answer it. Um, if nothing, then to destroy your drunken New Year dreams a little bit and tell you how much work is needed to get to your goals. And to explain a little bit about the work need to be done for proper handling this specific theme raised up in question I got. So don't fool yourself. This is just a small part of needed work, but it is maybe the most important part of your development as a profitable traders. So happy new year to all of you before headish start, and let's get into the question. Murgut, I had a question of journaling. What are the things that you are looking to jot down? I'm a little lost on this subject and I want to do it right because I know this is the most important part of trading. Thanks, Tom. In this video, I will focus on this particular question, but be aware there is a lot more to work need to be done to become consistently profitable traders. Anyway, this one is maybe the most important work after you find your edge in the market and find at least some profitability. So let's dive into it. Work and journaling, or how to become a consistently profitable traders. So required work. In behind of each consistently profitable trader, there is 90 to 95% of work done outside of actual trading, or let's call it executing. If you prepare yourself proper way, you will have success. And if you prepare, preparing is not only pre-market prep of the thesis, but also your check of your physical, mental, psychological state of the mind and state of the body, and all these things before you even open the charts. Then you need to take your quiet time to focus, and then open your charts and make your work pre-market work. I will not go into deep into this part of the required work, but you should know that trading is easy when you are ready, as any other job. About work and documentation, uh, overall picture of the work of documentation is comes from to the preparation, then executing this what you prepared, journaling this at the time of execution, then you making daily reviews and daily report chart, then you make weekly or and long-term reviews like quarterly and yearly. Uh, in all this time, we are actually building our statistics to be able to objectively, mathematically express our results. And after all these reviews and statistic work, we are putting actionable plan for development to become better. Uh, the next day, next week, next month, doesn't matter, but we develop on the objective uh, uh, data set that we need to build somehow. Journaling is the way proper journaling is the way how we're building all these data sets that we need to grow our business and to grow our execution skills and all these things. So the trading cycle is consists of preparation, executing, journaling, daily review, and then again preparation. We are go this circle is cycle or circle is never-ending story, and it is must if you are serious about trading. Journaling, why it's important. Your memory and emotions plays the games. They are highly subjective in hindsight. You miss the trade, and then at the end of the day, it's so obvious you should go long or short, but fuck it. This is not something that you know at the time or the when you need to do this or at the hard right edge that we are trading. We don't know the right side of the chart. We know only the left side of the chart. So we need to build our setups in place based on data that we have at the time we need to execute the trade, not at the end of the day. It is easy to be general after the battles. So journaling is like having a filmed videos of your games for review, and that is like any serious sportsman do to hone their skills and performance. If we remove the part of the practicing again. But this is also actually you can film the video of your performance for the each day. It is easy. Just took the OBS Studio or some other application, and you can stream the video of your trading to the YouTube. It's free and in your private section, and even on YouTube you can get the transcript of sounds or what you are talking inside of the trading day. So it's easier to make a journal at the time and record your thought process and your execution decisions and rationale of what you are doing in the market uh, um, at a time when it's really happening. So this is one of the way how you can record this and later to put it in some document. And journaling documentations, daily journal documentations consists of the header that need to have date. They need to have your economic calendar from your preparation. They need to have process goal for the day. They need to have your market observations, market bias for the day, etc. What it goes in your pre-market preparation. Maybe even your ranking of your physical and mental state before you're taking the trade. And there is a second part of journal documentation. This is execution part of documentations where it goes the trade number. So trade one, trade two, trade three, time of taking the trade, direction of the trade, entry, stop, and define targets for the trade. Sure, and size and all the other things that is part of the particular trade. And then while you are in the trade, you write market observation, so potential interesting thing that is developing in front of your eyes. observation of your emotional or thoughts and feelings. So this is like your observation of your mental state or your emotions or maybe your fear or greed or whatever this trade is triggers when you are inside the trade. You have to explain a rationale for taking actions. First, the rationale that you need to explain is the rationale about why you even take this trade at the first place, and then if you are any changes that you make in your trade management need to be written down as explained in rationale why you take these actions. And if you note some deviations from your process, adjustments as a part of the trade management or potential errors that you need to observe and understand why you made it at the moment of the trade. Hindsight will change a big way your ability to stay objective. So this is must part of the trading journal, and trading journal is not doing at the end of the day, but at the right at the time of trading. And as you see here, what is extremely important that every journal entry have to be recorded with a timestamp when you made it. This means that the market is a never-ending changing. It's only permanent in the market is changing. So how you read the market, you have to every of your observations or every of your taken actions have to be explained and time-stamped, so you can later review at a hard right edge. I mean, in a way that you are able to reconstruct what was exact picture of the market at the exact moment when you take this action or when you have these thoughts. So part of the work is, of course, is daily review. In daily review, we goes about as we have from daily preparation, we have daily process goals. So we need to see and review how did we perform today according to my daily process goal and actionable plan. Did I follow it? Did I miss it? Did I fuck up things? Or maybe doing extremely well? It's don't lie to yourself. Just go and write what really happens. How good were your thesis for the day or hypos, and what did you eventually miss to see to build a better hypos? You know, this is extremely important part for to learn how to properly make your pre-market preparations and how to properly handle the market for the day. Then it's going daily review is going that you need to review each of your trades from the process perspective. So it doesn't matter outcome of the trade, but what is matter, did you follow your risk plan? Did you follow your entries, your stops, exits, and all things done properly according to the process and setup you play or not? And if not, then try to figure out from your journal why didn't you follow your process. And then as you see the how market is develops, you certainly have some thoughts. Maybe okay, this maybe I should go long here or short here, and you didn't take this trade. Write this as well in your journal in between the execution parts of the journal. and see later after, of course, after the market. This is only way when you watching your decision in the hindsight. So is there was valid and good trades that you missed out, and try to figure out why did you miss it out? Was it hesitant? Was you hesitant? Maybe you're not so sure about your edge, or maybe your thought process was clouded with emotions or whatnot. Um, Try to find in daily review any big and repeated errors that you're making, and deviations from the process, or repeated errors of any kind in your execution. And also, you are not making only bad things in the market and fails, you are making good things. So find find the things that you are satisfied with today. What do you do well today? This is part of your strengths. Let's say if you take any trade at right moment and momentum shift, this is what you're doing well. But trades, it's maybe going against you, or you have red day. But find this and build this, build your progress on your strength, and try to avoid your weaknesses in the trading, you know, uh, and review also any interesting observations from the sessions and think it through. Maybe document these observations if there are potential new plays, new setups for the future as a possible base for honing your maybe present setups or develop new ones. This is how you will make your progress and your growth of your toolbox to extract as much as you can from the market. And at the end of this daily review process, build your process goal for the next day with actionable plan that you will lean on to fulfill this goal. This process goal and all this notice at this moment that I didn't tell a single word about your PNL. PNL is absolutely not important in your trading process. PNL is a result of uh, your proper executing your trading process and properly executing your setups with the edge. The process is something that we use and we honing to find our setups with the edge and define when they will work and how they will work and why they work at the end of the story. Then we have longer term reviews. On weekly reviews, we are going to watch our P&L. Weekly reviews is weekly review is I'm not watching my P&L at all through the week uh, to the day. Uh, I don't have my P&L on my charts at all. I don't know how much I'm up or down for the day. Sure, I have some feeling because I know am I trading good or bad, but P&L is something that I'm not interested at all through the week. I'm watching my P&L at the end of the week, at Saturday, at Sunday, when market is closed, when I'm making my weekly review, and then I uh, adapt my actions, my trading style or my size for the next week based on P&L. I'm not P&L based on account size. and did I have a bad week or good week or whatnot, you know. And now also there is time to review how successful you were with fulfilling your daily goals, and you need to review this as honest as you can, as truthful, and to detect why you were successful, or more important, why you were not successful. By the way, daily goals should be mostly the one. If somebody is multitasking, like women's are, maybe two daily goals, but men's usually can do just one thing at a time. So put your daily goal just one. Uh, I mean, each day you have your daily goal, just one daily goal that you focus on to from your from your review, and your when you set your daily goal is something that you set to um, put your trading at a higher level, next step up, you know. Then weekly review, it comes to review of statistics, and because statistics without sample size doesn't have any sense, so at weekly time perspective, you probably have some statistic that have the sense, and we are watching what statistics says about our opinion about success. So you can feel maybe, yeah, you are good, but if statistics tells you are shitty, then believe me, you are shitty. You have to work on this, you know. So, but proper statistics need sample sizes per each setup is 20 to 40 trades. Is sample size that will give you some point statistical wordful point of view. So if you are trading like me, if you are trading a small number of trades a day, like position, like bigger position, bigger moves, then you can use maybe rolling 2 or 3 week statistics for this review. And in this rolling statistics, you will see are you becoming better or worse in this. Now, at a week, we need to define what is working for us and what is not working for us, and decide what we will do with both of these things. Of course, what is working, we need to become better at that, and what is not working, we need to define why it's not working, and if it's something that we can fix, then we need to make goals to fix this. If it's not fixable, if it's just stupid, then we need to just stop doing this, what is not working. Um, Now, also, it is nice to see and nice to define what was overall condition of the market for the week, and did you adapt for these conditions, you know. And the key things you will solving for the next week, you need to define the key things you will solving for the next week with actionable plan how you will do it. The good wishes is not something that is priced in the market, and good wishes will do nothing. You need to have plan, and you need to stick to this plan to be able to make your growth uh, bigger way. You know. And about statistics, now this is big warning, big warning. Do not fall into a trap to build your stats and shape it. Trade your plan and use stats to shape your trading plan or trading execution. The point is, for instance, if you see that you have a low win percentage, and you put your goal to to make your win percentage better, and then for instance you start to take your exits faster as soon as you get into some positive P&L on each single trade. Sure, you will have your win percentage higher, but this is totally wrong. This is totally wrong, and you're lying to yourself because you are leaving on the table your bread and butter of your trading on your setups. So don't fall into this trap to build your stats changing your trading, but I mean because of stats, so to shape it better, trade your plan and use statistics to shape your trading plan to become better, not other way. Okay. So sample size, as I said, minimum is 20 to 30 trades to build at least a single point statistically worthwhile data for your trading idea or setup. If you have less than that, then you maybe can use a rolling statistics for 2 weeks or more. But this is minimum. This is really minimum. Without this minimum, this minimum number of the trigger trades, you don't have the proper statistics. So this is every other step that you will do based on this statistic is just pure shit. It's worthless. Okay. And now about statistics itself. We have two kinds of statistics. We have general statistics and relative statistics. Okay, so general statistics is overall days, how we were done in the market. You know, what days are positive, what days are negative. We we general in general statistics we watching for the traded instruments. So if we trade not only ES but maybe crude oil, maybe gold, and performance, we are watching for performance by each of these instruments. You know, we are watching performance by the time, hours of the day, maybe day itself. You know, maybe Monday and Friday is known as worst trading days because Monday is like you are not still not you have weakened mind and you are still not on your working temperature, and the Friday is maybe you are too tired, maybe you are not focused anymore as you should be, and all these funny things that happens in trading. Each single thing can have a great impact on your trading performance, and so we're also watching for our daily max drawdown relative to our PNL. We are watching for average winner, average loser ratio between average winner and average loser. We are watching our win percentage, our largest gains, largest losses, ratio between largest gains and largest losses. Oh, and two more things is important here: average hold time for winners and average hold time for losers. It should be a big difference between these two. If you are not scalper, of course, then it's almost the same. But for like positional trading over time doing, it's more like my average winners. It's anything between half hour and few hours, while average losers is usually inside 10 to 15 minutes time range, maybe half hour if market is slow, but this is a big difference in these two measurements, and it's About relative statistics, now we dig deeper in each setup and how the key components of your edge or setups looks relative to your overall numbers. So some setups works better, some setups work not so good. You will see this in this relative statistics metrics. I mean percentage rolling again in last 20, 30 trades per setup, or if you have more trades, then just use weekly. A realized risk reward for the setup relative to your overall numbers of or overall realized risk reward. And also you can add to this a realized risk reward for different instruments. Again, biggest winning times of the day for the each setup. Now this is relative to the setup. Not each setup is working in each market condition the same way. So we need to define when to use particular setups or don't use it. Biggest losing time of the day for each setups. So we can define again when not to use it, and we can even go deeper to find why it's not working or why it's working. What we are watching also the most frequent trading mistakes per setups, each setup or in general, in general statistic or relative statistics. Win ratio for setups in relation to relative daily volume. Now we are digging deeper to find to maybe try to hone our setups to have better when we see market generated information, to have better consistency in our execution of the particular setup, and to see how it will work. We ratio setup in relation to RTH open position, open drive. This is something that open drive or open position is something that is connected to market conditions. So again, we are watching for how our setup is working in these relations. Now also it's something that is part of the relative statistics is relative number of tries for the setup and win ratio. Now the point is that we can, let's say, we can try a few times to jump into the trade, and they stop. We are stopped, and then we try again. We are stopped, and we try again. Setup start to work, and if we have a lot of number of tries, maybe we need to adjust our stops or our hone our execution skills or entries or whatnot, etc. This is what relative statistics give us overview of our edge, you know. And journaling tags. Journaling tags is what I'm using as a main guide for this. I'm journal each my trade as from setup perspective, then from the execution, entries based on rhythm, micro swings. So did I enter good? Did I enter early, late? Exits, are they good? Are they early? Are they late? Late means like I was explaining yesterday, we can go long, set up work for in our favor like 40, 45 points, and then drop down and stop us out. This is what's called a popcorn trade, because when you're making popcorn, it's jump shit. I need the word. Okay, out of these things that you're making popcorn and come back down. Maybe sometimes market have sudden moves and in direction, so you have no time for reaction when your stop is hit. This is also part of the execution. And if you moves your stops, this is part of execution and exits. And now errors. This is something that is interesting. Uh, Many of you, if I should dare to say most of you, is just sometimes forcing trades, and not sometimes most of the time forcing trades, because you don't know actually what you are doing at in the market. You don't have developed your edge or setups. So these errors, it's happened to me as well. I'm not the same. I'm not machine. I'm different every new day. So when I find out that I'm forcing trades, so taking trades that no reason or there was no setup. This means that no reason for the trade. It's just something. Oh, this could go up or this could go down. I will try. When I find when I become aware of this behavior, I jump out of this trade immediately. Doesn't matter if I'm green or red. It was just not a trade I should take, because this is a huge mistake and huge deviation from the process rules. And I tag this setup, tag this trade, just as stupid and nothing else. No setup, no execution, just stupid. And some errors you can maybe chasing the trade is error. Okay, so you tag this as something if it's working or not, but you tag this as an error, and you can find your errors. And also what I'm taking in my statistic is number of tries on some setup, and first try, second try, third try, blah blah blah, to get proper statistical overview of my execution skills and my reading of the micro swings or rhythm of the market, and then what I'm monitoring in my trading is open drive, or better to say maybe previous where we are trading opening RTH session in relation to the previous established value. So is it inside previous value area, outside previous value area, but inside the range of the day, outside PVA, and we have gap up, gap down, small gap, big gap, inside composite value area, high in the high part or the middle part or the low part, outside of CVU composite value area, so in between two composite value areas as like high, middle, low. Again, this is part of the opening drive or opening market conditions on RTH open, and general market conditions. So overall, like bearish, bullish, and this comes from mostly from my reading of the yearly charts, and then we have daily market conditions. Are we rotational? Are we trend? We have trend day. Then I'm monitoring volume, but Globex volume before the RTH open. It was normal? It was higher, elevated, or lower than normal? And volatility is big part of the execution of this to making decision about the proper execution, putting the proper stop limits and all these things. So I'm tagging about high, medium, or low volatility in the market, and more or less that's it. What I'm doing. Of course, this is not. Uh, this is not. I'm going deeper sometimes, But this is uh, like guidance. I wrote just this like guidance. You have to build you have to build for the proper statistical review purposes. Your journaling tags need to be consistent and not change. And you build these tags actually based on your trading style, your character, your mentality, and what you want to see as your metrics, you know. So, but what is a general guidance for the journaling is for proper statistical review purposes, your journaling needs to be consistent. You cannot change all the time journaling and have proper statistics. So you need to be consistent and not change throughout the smallest period of journaling. Uh, Now I'm keeping my tag consistent for the month uh, and changing my tags uh, uh, when I see the need for the change my tags. I add it or deleting my tags at the end of the month and before the new month start. So that's why I think this short overview is good today as tomorrow or in 2 days. I don't know, is tomorrow market is working or not. We'll have to see this, but you can make adoption. You can make your preparation for the journaling, proper journaling for the January, and I'm making as is written here. I make my adaptation monthly, quarterly, or yearly. You know, but again, uh, journaling tags are usually fixed for the whole month, and if we need to adapt, then we'll do these changes at the beginning of the next month. But I'm keeping my major statistical focal point consistent for the whole year because I need to have longer term overviews of my statistical edge and changing in market conditions and all these things. So my statistical tags, the major statistical tags, is staying the fixed all the time. What we can change and adapt the specific tags we find out we could use for better understanding relative statistic measurements of particular setups, or when we adding new setups, then we add maybe new tags to monitor this setup in a way we find appropriate and in a way we need to find useful. So again, keep your journaling tags in line with the trading style, character of your trading setups, and use common sense to make them as simple as possible. Because if you make hundreds and hundreds tags, you will lose a lot of time on this tagging, and it will not be useful because it's too much different data or you get, and you will get nothing because you cannot use this. It's just too much. You know, when it's too much, you need to stay focused, and if you have too much inputs, this will defocus you from the uh, proper trading and proper using of your journaling process, you know. Um, and so make your tags most effective in pointing out your strong and weak sides. This is the point of journaling in general, and how you will make your journaling. You can make it using ordinary Excel, adapted spreadsheets. You can find it on the Google, and or you can use good journaling sites for partially automation for the journaling. As I'm using, I start to use TraderView as S&P Capital is use this web application. But at some time when Sierra changed, I cannot upload that data anymore in TraderView, so I switched to TraderSync, and I find this actually TraderSync um, more modern user interface, and yeah, I keep journaling on TraderSync. And that's why this disclaimer, you need to double check if any of these sites accept export from your trading platform before you, because this is paid sites. You will need to rent the time each month, and so check in advance if your if they get they can that you can upload your data from your trading platform for these sites, and about uh, about one more thing that is interesting, and it's somehow let's say these errors in trading that I mentioned about stupid trades. uh, it's happened before a few weeks. One of my students have a red week, and we make our weekly review, and I told him to go to the each and single his trades, and mark these trades that was stupid, and just make statistical analysis about this. So imagine that he is not taking these stupid trades. It ends up at Sunday evening when we make when he make review, and we have some small session. It ends up that these stupid trades was 2.5 times bigger losses than he make profit on the proper trades. So for the next week he become profitable just not taking these stupid trades. This was all what was needed for him to become profitable. Um, so don't fall into these traps. Stick to your process. Process is much better trader than you or me or anyone else, because the process is um, you need. What is the big part of the, and what is maybe hardest thing to to change uh, in your trading career is to stick to become consistent in your process. Um, how to say this? I mean, if you are deviating from your process, you actually incorporate too much entropia, too much chaos into your trading, and you will never be able to find your edge, to even you will not be able to even change anything in your trading, because you just cannot find out what is wrong with each particular play that you take or trade that you take. And the trick is that you don't follow consistently your process. So it is just common sense is that your results cannot be consistent in any way. So if you build your process, follow your process consistently, and then work on your process to become better. That is uh, um, all that you need to do. It takes time, it takes a lot of work, but this is actually all that you need to do to become consistent and it will grow from big losses to the smaller losses to the break even. Then you will have consistency in profitability, small profitability, then bigger one, and this is the way how you will build your trading skills, how you will build your trading business, and how you will be able uh, to grow pretty fast after. The point is when you become consistent, uh, all later um, all later steps is going extremely fast because this is geometrical progression. You're just sizing up and 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 follow your process, and because you already have confidence in your process. If it's work with one micro, it will work with 100 mini contracts. It's the same shit, you know. So it's if it's working one or two micros and it's worked consistently, you can size up, but you size up organically. Don't oversize because your mental games will trigger at that moment. You just have uh, um, it will trigger emotional responses, and you have to avoid to oversize when the stake is too high for you. You are prone to make errors or mistakes. But if you are not feeling um, uncomfortable taking trades, then you are undersized. So keep this in balance and go somewhere that at the level that you are uncomfortable, but it's not disaster if you are having losing trades, because you will have losing trades. And I can tell you that on the biggest profitable days, I had some 28, 30, 35% of winning trades. So I had a lot of losing trades because, but these trades, losing trades, was actually trying to get into the position on the best possible price. So I was stopped a lot of time, and then when trades start to work, risk reward ratio that I read from the higher time frame charts just trigger in, and it gives me a huge reward that cover all these losses before, and these losses didn't trigger any emotional responses because um, it was just let's say strong reading on the market context. So it's give us risk reward is, in my opinion, is the number one parameter that you need to build into your setups and into your trading. So I wish you all happy new year and good results, and 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 make your goals, work for them, be ready to do anything you need to make your results reality. Not make your goals reality with your results. Have fun and enjoy. Bye bye.